Good evening, students. Welcome back. So today we'll start with another topic. Let me just share the document. Okay, so the next topic is about audit evidence. Now, as regards audit evidence, now what is it that we need? So you can say that there are few auditing standards we plan to cover as a part of this audit evidence. Definitely we'll be talking about SA 500, 501, which is specifically on the aspect related to the audit evidence. And alongside, we'll also be talking about these confirmations which are required to be rolled out. For example, debtors, banks, okay, creditors, borrowings, in all of these respects. A very important procedure, particularly for certain areas. Then audit sampling. Audit sampling, we have talked about audit sampling quite a lot, but we'll try to understand what are the techniques which are required to be adopted when it comes to the audit sampling. Then we will also be discussing about some of the specific aspects. Okay, that's in relation to the related parties. The related parties is considered to be a very important area. Okay, means from the audit perspective, what are the considerations auditor is going to have when the related parties are involved? When the related party transactions are there, related party balances are there. Okay, in both the cases, right? And then we will talk about opening balances. Now, this is again a specific requirement when it comes to the opening balances. Now, what are opening balances? This is a specific requirement that arises when the audit is accepted for the first time. Means when a company or its financial statements are audited by the auditor for the first time, that's when this requirement becomes applicable. Okay, so we'll try to get into the details of all of these areas one by one. So let us move on to audit evidence first of all. Now, if you go back to the objectives of the audit, right? Now, what are the objectives of the audit? Objective is to express an opinion in relation to the financial statements as to whether those are reflecting a true and fair view or not, right? Now, when we are talking about financial statements, okay, so we are checking whether the financial statements reflect a true and fair view or not, correct? So that's the thing we will be looking at, right? Now, in relation to this, auditor will obtain reasonable assurance. That's what we have discussed, correct? And how will this reasonable assurance be obtained? When the auditor will sort of achieve, yes or no, sufficient and appropriate audit evidence. Now, this is what we have already understood as a part of our discussions earlier. Now, what is this audit evidence? Number one. And what do you mean by sufficiency, appropriateness in relation to this audit evidence? Now, why is that important? Because that becomes the basis. If the audit objective is to be met, what do you need? You need this audit evidence. Yes or no? Now, a question arises as to what is the meaning of this audit evidence. Correct. So that's the first thought anyone is going to have. Means what will comprise of audit evidence? What do you mean by that? What all things you'll have in respect of audit evidence? So let's try to understand. See, in relation to the audit evidence, we can say various documents while you perform various procedures. Okay. So you go verify those documents. It could be the invoices, it could be the agreements. Similarly, various working files are reviewed. Those are examined. Correct? A lot of information you will obtain from the client. Now, all of that is what? That's nothing but the audit evidence. In a way. Yeah, because that's what the auditor is going to look at. And that will become the basis for the auditor to perform the audit procedures, to also make the conclusions, and eventually to give the opinion basis that. Right? So that's why all of these things become important. Now, in a very simple manner, if one has to understand, you can say it's all about evidence which has to be in place. Okay, evidence which has to be in place. Evidence of what? Evidence of various things, which is actually audit. Correct? Now, this audit evidence, in a way, we have already talked about quite a lot as a part of our discussions earlier. So, actually, if you look at this audit evidence, I would say it's not really new. Yeah, but still, let's try to focus upon this audit evidence and let's try to get into the details in relation to the audit evidence as to what is the objective that we are trying to achieve. When we talk about audit evidence, means what is it that we are trying to look at as far as the audit evidence is concerned. Now, in this case, I think what we can do is we can pick a few examples. Okay. By taking those examples, what will happen? Number one, we will be discussing the audit procedures around that. Further, we will also be talking about the audit evidence related to that. Okay. So that's where we can sort of pick up these few areas like inventory, litigations and claims, segment information, which has been specifically covered by SA 501 as well. Okay, now let's talk about inventory first of all, right? So now if I move back to this audit evidence, now what are we trying to do? We are trying to get into the inventory. Okay, specifically, we will now be getting into the inventory. Now comes the question that if, let's suppose, inventory is required to be audited, what will you do? What all procedures you will perform? What are going to be the important areas? And what is going to be the audit evidence in relation to inventory in particular? Okay. So now, before we get on to this, any thoughts that you may like to share in relation to audit of inventory? And also, if you'd like to help me understand what is going to be the audit evidence specifically in relation to the inventory. So anyone, any thoughts? Over to you. Yes, quickly. Any thoughts you may have?
We'll check the existence and the valuation of the inventory.
Okay.
And for this, the auditor will attend the inventory count. One of the ways is
Right.
attend the inventory count. And he
Right.
will perform the procedures like what the management, first he'll look at what the management has performed. He'll observe that count also, and he will perform his own ratios along with the documents
Right.
to make a comparison.
Okay.
And there can be some situations when due to unforeseen circumstances, the auditor could not attend the inventory count because of valid and unforeseen circumstances. So he will
Okay.
perform next procedures like he will perform the backward calculations
Right.
for that.
Okay.
And
Now I think I've lost you. Yes, please go ahead.
yes, sir. So that was all what I could recall.
No, sure. That's very good. Now tell me one thing. Okay, specifically on one of the procedure you have mentioned, you are saying that let's suppose if the physical count could not be observed by the auditor, that's when he will get into performance of, you can say, backward calculation. Okay, means the rollback procedures. Can you help me understand what are going to be those situations when the auditor is not being able to perform the physical count? So why do you think such type of situation may arise?
Like there is an extra, it is a borderline area, and there is
Okay,
a war-like situation or aggression due to
right.
these are not normal, you say inconvenient situations, like when the auditor could not attend
Okay.
due to inconvenience like a time or money factor, but a situation which is far greater aggravating in circumstances.
So you're saying that is something which is beyond the control of the auditor, is it?
Yes, yes, sir.
Okay.
Beyond
Good.
a normal person can, reach there. Beyond
Right.
the
Right. Good. Very good. Now, let's try to look into this inventory. So actually, what are we trying to do now? We're trying to think about how to audit inventory in a very broad manner. See, what is going to be the first step? If let's suppose you were to audit any item, and immediately your answer will be, we'll have to plan. Yes or no? So what is going to be the first step? Planning always. And in terms of planning, what will you do? A lot of things you will understand. Then you will do the risk assessment so that you get a clarity as to what all risks are involved therein, right? You will also be trying to assess any significant risks that may be attached over there. Okay. Now, in this case, we are not actually focusing much on the planning right now. We are talking about more of, you can say, substantive testing or the execution procedures. Even for that, or for those procedures to be looked at, what do we need? We need the assertions. Yes or no? So I would say this is going to be our first step. Assertions is something which is not new to you. You all understand what all assertions we have. This being a balance sheet item, so you'll also understand what all assertions are going to be linked to inventory as far as is audit is concerned. Now, in case of inventory, there is one assertion which is called as existence. Okay. Now, just think about a procedure which the auditor may perform through which he would obtain comfort around the existence. Yes or no? So, anything which comes to your mind in relation to existence. Now, somebody may think that why do we really get into this? See, when it comes to the inventory, there could be a risk. What is the risk? Inventory is being shown in the books of accounts, but physically it doesn't exist. Yes or no? Now you may be thinking, but why would a company do that? Is it not a kind of fraud? Yes, of course. But as an auditor, do we need to look into those types of risks or not? Of course, yes. Right? So now comes the question that if you were to look into those types of risks, so what do you do? How do you achieve that? Correct? Because this existence happens to be a very important area in relation to audit of inventory. Okay. And this is a big risk. And it's again not specific to a particular industry. There could be various companies. Some of the companies may be showing higher inventory than what is there in the physical records, okay, or what is actually physically there. Some of the companies may be showing lower inventory than the physical inventory which is in place. So it's not about saying that the inventory doesn't exist physically completely and that's the risk. No. So maybe out of 100, say 20 doesn't exist, 80 doesn't exist. So the proportion could be different. So we are not saying that it has to be 100% always. Right? Okay. Now, for inventory, if you'll just think about any audit procedure, because there are various audit procedures you can perform for inventory. Inventory is something which is linked to procurement also. So in a way, what do? You verify purchases, you verify the rates, you also verify the valuation. Yeah, there are procedures you will perform on the inventory valuation, wherein you will try to check which all components of cost have been loaded on the cost of inventory. Again, a very important and at times complex calculation. Complex because the way that is covered by the company, whether that is appropriately done or not. Some of the cost elements may have got skipped, some of the cost elements may have been added unnecessarily. Yeah. So such type of concerns could be there, which the auditor is required to look into. And these are the common audit procedures in relation to inventory. But if you will think about existence, and if you just try to link all of these procedures to the existence, okay, so that's not something you are able to achieve. Yeah. So if one has to obtain the comfort around the existence of the inventory, how do we do that? By checking the supporting documents. Can we say that the inventory is physically there? Answer is no. By checking the workings, can we say that the inventory is physically there? Answer is again no. Means we are not sure. Correct? So that's why one has to look into this. One has to understand what are going to be the procedures around it. And that's where the most important procedure and the only procedure which takes care of this assertion comes out to be the physical verification. Yes or no? Something which I think Prashant just talked about. Now, therefore, physical verification is considered to be an extremely important audit procedure. And therefore, the audit evidence that we obtain through this procedure happens to be the critical audit evidence. Right? Now let's try to understand as to how this physical verification is required to be looked into, what all factors you'll consider, what all areas you'll try to get into in relation to the physical verification. Okay, so let's try to discuss this. Now, for a company, if you were to begin, if you were to perform physical verification, now comes the question, what is going to be the approach? Means how will you plan it? What all things you will consider, what all things you will not consider. Why? Because all of these things will eventually get into the details, or will help you get into the assessment of the physical verification. So what is going to be the starting point? So let's take an example to discuss this. Okay. Now, say a company has an inventory. Let's suppose inventory balance is rupees 25 crore. Now, as an auditor, what do you do? Can you go and physically verify this entire inventory? See, practically that is not possible in most of the cases. Why? Because in terms of amount, even though it may appear that this is 25 crore, but if you were to do physical verification, what do you need? Quantity. Okay. And as far as the inventory is concerned, it may be all spread out. That's one. So the quantity could be huge, which the auditor may not be able to verify 100%. That's one. Number two, it may happen that the company is multi-locational. And the inventory is spread out across locations. Now, in this case, the challenge increases. Why? Because which all locations you'll cover? Yes or no? Because if let's suppose it's spread out across India, say at 25 locations. So how should the auditor approach this? Means, will he be covering all the locations? And please try to understand why this becomes all the more challenging. See, the assertion we are trying to look at is the existence. Okay. So say we are talking about 31st March 2026. Let's suppose that the reporting date. Now, when do you need to test the existence? Do you do that as on 10th of April? As on 10th of March? No. Why? Because the financial statements wherein the inventory is going to be shown will be as of 31st March. Okay, that will be as of 31st March. Now, in that case, because it will be as of 31st March, so that's why what do you need? You need the physical verification, or you can say you need the comfort over its existence as on which date? As on 31st March only. So that is why, what do you need? You will need to perform this physical verification near around 31st March. That's why, what do you find? Generally, physical verifications are performed around 31st March. It may be performed on 30th March at times, 31st, 1st of April. Okay. Closer to 31st March, closer to the reporting date. And we understand the reason as to why do we do that. Yes or no? Now, in this case, another question arises that if, let's suppose, this 100% is not possible, so what do we do? Yes or no? See, when it comes to the audit or the physical verification, actually, auditor will not be getting into the physical verification 100%. Auditor will be doing a sample. So you can say selected items are going to be picked up by the auditor. Right? Means sample only. And that is where the auditor will get into ABC analysis. Again, a very common terminology. Now, what is this ABC analysis? It's about categorizing the items on the basis of the amount involved. You can say the most valuable items happen to be category A, then lesser valuable happens to be category B, and of course the least valuable happens to be category C. So that's how it's generally segregated. Now, one that is most valuable is going to be focused upon. There are two reasons for that. One, of course, is these are of a significant value. Okay, so how do you skip that? So the percentage of testing which will be done will be higher in case of category A. And therefore, and I would say something which is linked to that, therefore, what will happen? The more and more category A you cover, the higher is going to be the percentage of overall inventory you cover. Automatically. Yes or no? That will happen automatically. Correct? So that's why auditor will be focusing upon this category. Okay, then he will be picking up, say, fewer items from category B, and of course fewer items from category C as well. So it's not that because C is low value item, so that's why it will be skipped. No, that is also important, and particularly from control perspective also that is important. Yeah, because even in respect of low value items there could be a problem. Important is to get the control also, because if the controls are appropriate, if those are strong, then eventually they decide or they have an impact on the extent of substantive testing as well. So it helps at both the places. Correct? Now comes the question that what is it the auditor is going to do? See, the auditor, as we discussed, will have to prepare a plan with the management around this physical verification. Because physical verification is something which the management would be doing. What is the objective of the auditor? That while the management is doing that, he will participate and observe as to what are they doing. So he'll not be doing that himself. Of course, he's there, so he'll be checking that. But it's the one which is being done by the management, and there's a participation from the auditor. So you can say that's the approach. And for doing this, all of these activities are required to be looked at, as we discussed. Okay, selection of items to be covered, extent to be covered, and of course the period to be covered. What is going to be the management plan, which all things they are going to cover, when are they going to cover, is it done in a phased manner, or is it being done by the management in one go? Many a times what do the companies do? Let's suppose they have some plants. Okay, they have some operational offices, so they may be planning to shut down that, so that the movement of inventory doesn't take place while the physical verification is going on, because that may pose challenges for the ones who are doing the physical verification. Okay, again, that's commonly done by most of the entities. In case of some of the entities, inventory in terms of its size could be huge, significant. And many a times, what those companies may have planned is not to do the physical verification towards 31st March, or to do that only towards 31st March, but to do that in a phased manner. Okay, so they prepare a plan. Let's suppose some of the part they cover in Q1, some of the part they cover in Q2, Q1, Q2 means quarter. Okay, so we are talking about quarter one, quarter two, quarter three. So that is again a possibility which some of the companies may be considering. Again, that depends on the complexity as well, in terms of the physical verification. Important thing on the part of the auditor happens to be what? A clear cut plan which is laid out in respect of physical verification. And this is extremely important. Why? Because see, it's not something which the auditor is going to do independently. Had it been any other audit procedure, auditor could have said that, okay, if I don't do it now, or if I'm not coordinating with the management, maybe in respect of some of the things, it's possible. But this is one activity over which proper coordination with the management is extremely important, because if that is not there, then this activity is not going to work. Yes or no? Yeah. Now, Sometimes what may happen is the physical verification is not performed on 31st March. Say that's done on 10th of April. Or say 6th April. Or even if say 2nd April. Now let's try to understand the challenge. Now when you actually go and physically verify, what is that date other than 31st March? And what is the comfort you need? On 31st March, inventory should have been there physically. Now, if let's suppose you have not done the physical verification on 31st March, how do you get to know about it? Yes or no? That's the question which will arise. How do you get to know about it? How do you know whether it is physically there or not? And that is where I think this point which Prashant mentioned happens to be roll forward or rollback procedures. Means if you do that on 10th of April, what do? You roll back those numbers. Correct? You roll back those numbers. Why? Because as on 10th of April, we understand it's physically there. Now, to this, if we delete any adjustments, any movements which have taken place from 31st March to 10th of April, for example, from 31st March to 10th of April, let's suppose 100 is the balance on 10th of April and 80 was the balance on 31st of March. Let's suppose during this period, what has happened? 30 items have been consumed. So, which all items have moved out? 30. Okay. So, if I reduce 30 from 80, what do we get? 50. But let's suppose there are also new items which were in. And net therefore, what do you have? 100. Correct. Now, in this case, what do? You start with this number of 100. Okay. You add this 30, deduct this 50. Where do you pick this from? Books only. See, this is physically verified. 100 is physically verified. To this 100, what do? You will add 30. You will reduce 50. Why? Because you are trying to roll back to 31st March. And that's how you match. You try to match whether these numbers are reconciling now. These are matching. Now you may have a question that if let's suppose we do that, okay, then how do we get the comfort around 30? Similarly, how do we get the comfort around 50? So there again, what will happen? Auditor will have to perform audit procedures. Auditor will have to verify these two. Okay, auditor will have to verify these two. Right? So 100 is audited, means physically verified. And if we audit 30, if we audit 50, then this is very simple to be computed. Okay, so therefore, what has happened? We have rolled back and we got the comfort that the numbers are fine. Similarly, if let's suppose that is done on 28th of March, then you will roll forward. So that's what you call as a roll forward or roll back. Clear? Right? Now, when we perform the physical verification, in this case, what are we trying to do? Say inventory as per physical records or inventory which is physically verified. Say that comes out to 100. Let's suppose that's the quantity, because whenever you physically verify, you look at these things in quantitative terms. Okay. Now, say inventory as per books happens to be 90. So we are talking about the same day, 31st March. Okay, in this case, what do? We find there is a difference of 10. Yes or no? So what do you do in relation to this difference of 10? Tell me, what do you do? As an auditor, if you find there is a difference of 10, so what will you do? Will you say it's an error? And therefore, the objective of physical verification is achieved and this error needs to be rectified? Your thoughts? Yes, anyone? What do you think? In this case, what do you do? Now, whenever you will have any such difference, and in most of the cases, you will find that difference. Okay? In most of the cases, you will find that difference. Now, there comes the point. Will you straight away jump on to the conclusion that because a difference has been obtained or we have found a difference, so that's why it's an error, and because it's an error, so it needs to be recorded in the books of accounts? No. What is going to be the first step? See, any such difference will require reconciliation. So as an auditor, what do? You will ask the management to look into it. And you will require a proper reconciliation. If the management is able to reconcile, then what do? Now you have received another detail in a way. So you will audit the reconciling items. Say you have received reconciling items. Now what do? You audit that. You audit that. Correct. The other point is wherein the management is not able to reconcile. That's what will become a problem. Why? Because you want a reconciliation. What are the reasons why the management has not been able to reconcile? Do we have any pilferage? Or there are some reasons, because it's not only about shortage. Okay. Generally, what do we think? That there will be a shortage. No, it's not necessary. Maybe there's an excess inventory which has been observed. Controls could be weak. Maybe the proper recording is not done in the books of accounts. Yeah. So various reasons could be there. Important thing, therefore, on the part of the auditor happens to be to get into the reconciliation. If the reconciliation is not obtained, that's when you will be looking into the reporting implications. Why? Because if the amount is significant and impact is going to be significant, also because this area is important, and there's a question mark which has been put on the existence, not entirely, but to the extent of this difference. So therefore, one will have to assess what do we do, right? Means, will you consider a modification in such a case? That's the point one has to look into, right? Any questions so far? Any doubts if you have? Prashant, Saminathan?
No, sir.
All right. Next, another important area, litigations. Now, what are litigations? And can you also perform some procedures on that? Answer is yes. Let's take an example of what could be a litigation. Means, what is it that we are discussing right now? Let's suppose there's a company PQR Limited. Okay. This company got a tax demand. Say for rupees 5 crore. So company received a demand from income tax for rupees 5 crore. But the company doesn't agree to this demand. Okay. And that's why what did they do? They have got into a litigation. We are talking about litigation in this respect. Because the company doesn't agree, so that's why there's a litigation. Yes or no? Now, similarly, litigations could be there. And when it comes to the litigations, in most of the companies, you will find one or the other litigation. Most of the companies. Okay. Now, for these litigations, what are going to be the audit procedures? How do you perform them? Anyone? Any thoughts? Prashant, Saminathan, any thoughts that you may have as around litigations?
We'll check the board resolutions if there are regarding. We'll also
Okay.
check litigation expense account,
Okay.
and if there is any payment made to the lawyer.
Right.
We'll also check with the if there is an internal legal advisor or a function, law
Right.
department. We'll check with them.
Right.
We'll take representations from the management, written representations.
Okay.
And we'll also uh, look into the sites of the company if there is any news or from the website regarding any.
Okay. Good. I think a lot of points you have tried to cover. See here again. What is our objective? Let's try to understand the objective. As an auditor, what are we trying to achieve? I would say three things. In relation to this tax demand, what could have been the possible outcome? First situation is company should have accepted the demand and therefore created a provision in the books of accounts. Second, company should have shown this as contingent liability. Third, do nothing about it. So I'm just trying to look into the accounting implications. Correct. As an auditor, what do? You will have to get into the assessment. But please understand, because we are talking about litigations, so that's why we have this challenge that it's all based on judgments. Okay, so nothing is 100% accurate here. A lot of assumptions are required to be considered. And the moment you have such situation, it becomes a complex exercise for the auditor to audit. It's not easy. And we can also say that some sort of manipulations are also possible. Right? Now, what are the manipulations? Maybe the company should have recorded as a provision, but they have not done. They've shown this as a contingent liability, and thereby there's a P&L impact which they have tried to avoid. Yes or no? And vice versa is also possible. Though generally that is not there. Right? So in this case, what are the procedures auditor will do? So as Prashant mentioned, first of all, do the assessment, what the company has done, whether that is appropriate or not. In these types of cases, generally a consultant or a lawyer would have been engaged by the company. It's important to understand the thought process of that lawyer or the advisor or the consultant of the company, and to also understand the matter in detail. Yeah, so a communication is required to be done. Of course, discussions will take place with the management also, and many a times management may also have those experts, in-house legal teams, depending on the matter which is involved. It could be related to tax, it could be related to any other law. Yeah, but that's one of the important procedure. Okay. Number two, there is also a risk. See, when it comes to litigation, there are three things we have discussed: provision, contingent liability, or say you should have done nothing. But there is one more risk. What is the risk? Maybe during the year, company has received any demand, any notices, but the company has not disclosed that to the auditor. So actually, what is the assertion we are trying to look at? Can you tell me? What is the assertions? Oh, sorry, what is the assertion we are trying to look at? Completeness.
Completeness.
Very good. Completeness. and completeness is a very significant area. Why? Because it's a risk. Because this is something which the company could have done. So we are not saying that the company would have actually done, or in most of the cases, this would have been done. No, we don't know. But we know such a risk exists. Now, if let's suppose company has received a demand, a notice, or some matter is going on, but which has not been disclosed to us, which is also not appearing in the books. So what do you do? How do you check? That becomes all the more challenging on the part of the auditor. Correct? In such a case, what is the course of action? Means what is the procedure which the auditor will have to perform? Yes or no? What is it the auditor will have to do? So now for this, let's understand what is the requirement. What is it the auditor will have to do? See, when it comes to the completeness, there are few ways which could be there in the books of accounts itself. Let's suppose if some dispute is going on, maybe the company has hired, engaged a lawyer or a consultant to whom some charges are being paid. Maybe there are some fines, penalties which the company has paid. Yes or no? So that's why some of the expenses like legal and professional charges, so this can be reviewed by the auditor. Similarly, rates and taxes. So these are the expense items, means expenses ledger, which the auditor can review. Okay, which will give the auditor some insights, or you can say some evidence in respect of any of those matters which may be around but which are not known to the auditor, through which the auditor can get into the details and thereby ensure that if let's suppose those are there with the company but not getting recorded, then appropriate accounting can be done for the same. Okay, there's another procedure, and that is what you call as balance confirmations. Right, so these are the independent confirmations. Let me just call it as independent confirmations. Now, why do we add the word independent? Let's understand that. Independent confirmations may be rolled out by the auditor to the legal attorneys, asking them to confirm about any litigations, asking them to send the details of the areas of the matters they may be engaged on. Okay, because if that communication takes place, if those confirmations are obtained, so something which is not appearing in the books, auditor may be able to understand that. Right? Now, see this procedure, independent confirmations, is an important one. So now what we can do is, we can just focus more on this procedure, particularly independent confirmations. Actually, we have this auditing standard also, right? Wherein we are going to discuss about the confirmations, something that we call as external confirmations, SA 505 as well. So what we can try to do is we can try to get into the details of this area as to what you do in case of these confirmations, right? Okay. So before I get into the details of these confirmations, means what are the things you'll do, means this entire approach around it. I think Saminathan has shared the auditing standard number also. Can you explain in detail? Okay, now that is important because this is a very important audit procedure. From examination perspective also, I would say, and practically also when we audit. So it's a very important audit procedure, right? So now, in this case, can you explain what is it you'll do in case of these independent confirmations? Yes, over to you. Anyone? Saminathan, Prashant, I can see Sachi is also here. What is it you'll do in case of independent confirmations?
We'll request the management, and management will give the authority letter to the auditor,
Okay.
and from that the auditor will directly issue the letter to the parties
Hmm.
and to their official mail account, not the Google account or this, the official mail account of the parties,
Right.
and asking them to confirm the balance directly to the uh, auditor. It can be
Okay.
either a positive confirmation or a negative confirmation.
Okay.
And negative confirmation is used in rare instances where the risk involved is low,
Right.
or and there is less chance of audit party not responding.
Okay.
And otherwise, most of the cases, the positive confirmation is methodology is being used. And it
Right.
and if we are confirming from the banks, the
Right.
auditor can also visit the banks also and get the confirmation from there.
Right. Anything else anyone would like to add to this? Okay, so let's look at this. I think this has been nicely explained by Prashant in terms of various things you do as an auditor. Now, what is external confirmation or independent confirmation or a balance confirmation audit procedure? See, there are two parties. Say we have this company PQR Limited, and this is the auditor. During the course of audit, there will be lot of informations which the company will exchange with the auditor. Correct? It could be in relation to various supporting documents, various working files, explanations in respect of the queries or the inquiries of the auditor. So a lot of information will flow from the management to the auditor, right? But please understand that any information which is provided by the company to the auditor, what do you call it as? Evidence. That's nothing but an evidence. Yes or no? But this evidence is what? It's coming from the company. See, because the company is getting audited, So the company is providing this evidence. This is internal evidence. Yes or no? This is internal evidence. Let's suppose a company has sold some goods and the auditor is checking the sales invoices. Now, these are the invoices which are generated by the company only. Correct. So, if an auditor were to place reliance on the evidence, it's considered that the auditor should be looking at more of external evidence rather than internal. External means something which is coming from outside the company, from external sources. Does it mean internal evidence will not be accepted? No, we're not saying that. That is important. That is required to be obtained. Auditor will always be obtaining that. Okay? But if the auditor were to compare external evidence wherever that is possible, external evidence wherever that is possible is considered more reliable. Okay, so that is considered to be more reliable as compared to internal evidence. That's the point. Understood? So why do we get into these confirmations? Because they are coming from external sources. Despite the fact that the auditor has performed various procedures, obtained a lot of information from the company, we do this procedure in respect of confirmation. Why? Because it provides external evidence, which is considered to be more reliable. Can you now understand the importance? Why is this considered to be so important? Right? Because it's more reliable. Correct? Now let's get into the technicality and something I would just like to add to some of the points which Prashant has already mentioned around the confirmations. Now, where do we need the confirmations? Can you tell me the areas of the financial statements wherein the confirmations are required to be obtained? Quickly, anyone?
Debtors,
Great.
banks, and stock in the custody of third parties.
Right. What else? What else? Great. Saminathan says debtors, creditors, bank, stock. Stock. For stock, you don't get into this confirmation generally. But of course, if you're talking about stocks lying with third parties, therein I can definitely understand. When you say intercompany balances, I'm assuming you're talking about receivable, payable. Yes or no? Very good. So let's try to understand where do we need confirmations? Trade receivables, okay. Trade payables, borrowings, banks, means the bank's balances. right? Related party balances, again important for litigations, for these legal claims, etc. Right? So you can say to the legal attorneys, investments, loans, advances. Okay, you may be thinking for all of these, answer is generally yes. Why? Because it's possible for the auditor to. So if that's possible, why don't we get into the external evidence? Yes or no? If the external evidence is available, why don't we get into that? Now, in this case, what is going to be the step? So we have this management PQR limited. We have this auditor. And let's suppose the auditor is thinking about sending confirmations to whom? Banks. So what will he do? He will first of all reach out to the company that this is what he plans to do. List the banks where he wants to send the confirmations. See, in case of banks, unlike, for example, debtors, creditors, you will roll out to all because bank is a important area, significant risk area. Okay. Now, how does this communication between the auditor and the company will take place? And what do you do? Auditor wants to send the balance confirmations directly to the banks. That's the objective. But bank is the party of PQR, not auditor. So that's why auditor reaches out to PQR and PQR will arrange the letter confirmations to be sent to the banks. Means those are obtained on the letterhead of the company itself. Will those be sent by the company? No. So auditor will roll out these confirmations independently. And auditor will request the party, means the bank, to respond directly to the auditor. Thereby, auditor will ensure that involvement of the company is not there. That's why it's considered to be an independent procedure. Yes or no? Now, it's an exercise in itself. Why? Because for the auditor, rolling out the confirmations is important. And there has to be an evidence that these confirmations were rolled out as well as received. Okay. Now, what is going to be the evidence? See, the auditor needs to, and generally, practically, what do they do? They will create a tracker. Let's suppose there are various banks, there are various debtors, various creditors, wherein these confirmations are sent. A lot of coordination will be required. Why? Because auditor will send the confirmation, other party may or may not respond, then the auditor will have to send a reminder. Okay, it's a kind of follow-up auditor will have to do because other party is not responding. So 2 to 3 reminders may be given by the auditor. And this proof of dispatch, these confirmations is very important. Similarly, when the banks are responding back, or let's suppose the other parties are responding to the auditor, so they are not required, they should not be responding to the company. No. Okay, they shouldn't be responding to the company. What should they do? What should they do? They should respond to the auditor directly. So that's why the responses are received mostly through hard copies, also through emails. If let's suppose the confirmation has been sent through email, as an exception, generally what will happen, first communication will be through hard copy from the auditor to the banks or the other parties. Sometimes these parties may not be responding, time is limited, so that's why auditor can create an exception and send the confirmation or this confirmation request through email, but that will again go directly to the concerned party, means the concerned bank, concerned debtor, concerned creditor, and those parties are also required to respond back to the auditor. They can always loop in the management if they want, and which they generally do as well. But this confirmation has to be sent to the auditor directly. Right? Now, in this case, some of the challenges that could arise. Let's try to understand that. Number one, auditor is sending the confirmation, reminders, other party is not responding. That's where the auditor can reach out to the company again. That I have been following up with the other party, but they are not responding. So can you please ask them to respond to me directly? And you may be thinking, but the management was never required to get involved. See, the management is not required in relation to the communication. Means that has to happen independently and directly to the auditor. But if the management is involved in getting this process completed, okay, or let's suppose to get this process completed in time, why? Because the other parties are not responding. That is not an option or issue. Okay, so that's something which the management can always look at, right? But sometimes what may happen is, despite the follow-ups, the other party is not responding. See, as we discussed, for banks, it's considered to be important. So the auditor will always want to get the confirmations, particularly in respect of banks. But what if some of the confirmations are not sent at all? Okay. That's where the auditor will have to look into alternate audit procedures. Right? Alternate audit procedures. Now, can you tell me Any thoughts? What is this alternate audit procedure? Anyone?
So to check the receipt and payment in and around of that reporting period.
Okay, so if you can just take an example, Saminathan, and explain this.
So example, the creditor balance is outstanding 1 crore on 31st March 2020, say 25.
Okay,
So when you're auditing, see,
right,
we send that the confirmation, direct confirmation, the
right,
positive confirmation,
right.
but we did not get any response from them.
Okay,
Or in case we approach that debtors, they are not responding. When we are checking with that management also refusing to get that information from the external party. And finally we will check with the those charged with the communication also. In that case we will do the alternate procedure. In this case the outstanding is 1 crore. The
right.
subsequently, see, we generally do the audit after that only. uh,
Yes.
so during the April or May month, we received that outstanding 1 crore, which means
Okay,
the balance is correct only. We can report it
okay,
as 1 crore is outstanding, like that.
right.
That is.
So let's try to understand what do we have in case of alternate audit procedures. As the terminology suggests, it's alternate to obtaining confirmation. And please remember, it has to be exceptional in nature. Means auditor can't say that I'll not send the confirmation, I'll go to the alternate one. No. Alternate has to be the alternate, and you can say the second preference. That too when the first one is not working. Right? So that's very important. Number one. And in case of alternate, let's suppose we take the example of creditors which Saminathan has picked up. Let's suppose there are various creditors A, B, C, D, E, F, G to whom the confirmation requests have been rolled out. A has responded, B has responded, D has responded, F, C didn't respond, E didn't respond, G didn't respond. Reminders are sent, management is also following up, but they have not been responding. So you may be thinking, but is it practically possible? Yes, practically that's what happens in most of the cases. And it's very common to expect that all the parties to whom the confirmation request has been sent will respond. Generally, you don't see that happening. Generally. Now, when it comes to C, E, and G, let's again try to understand what was the audit objective. Completeness. So why were we rolling out to ensure completeness? Means any of their transactions is not skipped. That was the objective. Yes or no? That was the objective. So therefore, if this is not achieved, what do? You will obtain a list of invoices. Why? Means you are obtaining the built up of this creditor balance because you are trying to check the creditor balance. So no. And this built up of this balance through the invoices which you have received, you will audit that. Means you will verify those invoices. Because this is being done subsequent to the balance sheet date, so it may have happened that some of these parties have been paid. So subsequent payments would be tested, through which we will try to get a clarity as to whether these balances were genuine or not. Now, whenever these confirmations are rolled out, particularly when it comes to debtors, creditors, see, for a company, there could be various parties. So these balances or these confirmations are not rolled out to all. So if you look at this list I picked up, these are not the 100% creditors of the company. So we don't have the 100% creditors in this case. Okay. Which means we are looking at the sample. Yes or no? Now, this is a very important point. If let's suppose there were 30 parties, out of which, what did you do? You selected these. So that means you are performing this procedure of external confirmation on a sample. Yes or no? Now, when you will perform this verification of invoices, subsequent payments in respect of, let's suppose, party G, therein you will not be able to pick up only few invoices. Because please remember, you can't do sampling of sampling. Where do you apply sampling? On population. Understood? That's a very important point for you to look into. Clear? Yeah? Okay. So with this, what we can do now is, any questions if you have, we can look into that. I think you are clear. Yeah, sure. Everyone clear? All right. So great. So what we can now do is we can take a break. Right? And let's continue after the break. Huh? So Ashok, we can take a break now. moving further. Okay, so now the other specific aspect is about the related parties. Now, when it comes to the related parties, there again we have a couple of considerations, I would say primarily. What is the first one? Completeness. See, what is a related party, and therefore the transactions with the related parties, balances with the related parties. All of these things have a special consideration. Why? Because there's a risk which is attached to the related parties. And there is a guidance under the under accounting standard in terms of the related parties. So you can always go look at that as an auditor and ensure that the parties which are related are being shown, because there's a disclosure requirement in relation to the related parties at various places. Okay, be it loans, advances, and of course, in terms of the disclosure, all the related party balances, transactions are required to be disclosed. Okay. Now, in respect of these related parties, see, the concern is not around the disclosure, I would say. Because if let's suppose a company has got all of these as related parties, so you can always go look at their balances, look at their transactions, and ensure the disclosure around those parties in the financial statements. So what is the problem? See, the problem is in respect of those parties which happen to be related, but which are not being disclosed by the company, wherein the company doesn't let you understand. Okay, you don't get to know whether that is a related party or not. So I would say it's about the completeness. That's the biggest challenge. So that's why a proper assessment by the auditor is required. Okay, so one is, of course, in terms of their transactions, their balances. There again, you'll have this rollout of confirmations, as we just discussed. But before that, another very important step happens to be what? Identification. Identification is also very important. Identification of those parties which are not getting disclosed. Okay, now, how do you do that? You can look at the organization structure, review that. Okay, try to understand the relationships which are there in that organization structure. Significant transactions which might have taken place during the year with some of the parties which are not shown as related parties. Some of the documents like minutes, some of these key contracts can also give you an understanding about such type of parties. Okay. Now, once you have that, or once those are identified, what is going to be the next step? Next step is about their examination of balances, whether the transactions are at arm's length or not, because that's the most important risk. Yes or no? Because with the related party, what is the risk? That the party is related, and that's why the transaction could have been influenced. Yes sir. So how do you ensure that you get into the details, you will get into the audit committee approvals in terms of the arm's length prices which the company would have considered, So all sort of procedures become important on the part of the auditor, right? Next, one more specific procedure happens to be the audit of opening balances. Now, what do you mean by audit of opening balances? Let's try to understand. Say a firm is appointed as the auditor of 25-26. ABC is the audit firm. And this is the first year firm will audit. Okay, financial statements of the company are going to be audited for the first time by ABC. '24, '25 is audited. But who audited that? Say PQR and company audited that. Okay. Now in this case, let's try to understand the financial statements and some of those requirements related to financial year 25-26. Right? For 25-26, will the auditor be verifying, examining the transactions during the year? Answer is yes. Some of these things which are there during the year will be audited. Okay. But what about the opening balances? Actually, if you are talking about opening balances, that means as of April 25, sorry, 1st April 25. So in a way, we are also talking about the closing balance of 31st March 2025. That's one and the same thing. Yes or no? Now, herein the auditor is expected, because he has not audited the financial statements of the previous year or years. It's audited by somebody else to get a comfort on the opening balances. So does it mean that a new auditor will have to go back and re-audit the opening balances completely, which are already audited by another firm? No, that's not the thought process. That's not what the auditor is required to do. He will be performing limited procedures. Okay, so that's why we are saying that some sort of comfort around the opening balances is required to be obtained. Right? Okay. Now that level of comfort is required to be obtained by performing some of the procedures. For example, of course, tracing the opening balances to the audited closing balances. Okay, that's the first one, a simple one. Now, if you look at the debtors balance, for example, okay, which are carried forwarded to next year, say 31st March 26. So the built up which would have taken place during the year would have been audited, right? But the opening balance which has been continuing is not audited. So that's why that opening balance, by taking few examples of that, should be looked at. its subsequent testing should also be looked at, because that will help the auditor in auditing in a limited manner opening balances. Yeah, so once again, if you look at the opening balances, these are not audited in some of the cases, and these are just carried forward as it is, which is not appropriate on the part of the auditor. Okay, clear on this? Yeah. So now moving further. So I think we are largely through, except for one more area, and that is about sampling, which to a certain extent we have discussed. But let's talk about sampling now in a brief manner, and then we'll move on to the questions. So through the questions, we'll just try to cover all of these aspects, right? So just give me a minute. Let me just open one more file through which we'll try to cover this sampling. Just give me a minute. Now, what is sampling? See, the sampling is required because the auditor is giving a reasonable assurance. Means he's not doing 100% testing. Entire population cannot be checked. 100% testing can't be done. Okay. So that's why some of the samples will have to be collected. Those samples which you select for the purposes of audit, for the purposes of examination, is what you call as sampling. Okay, so there's a terminology around the sampling risk. What is that? The risk that the auditor's conclusion based on a sample may be different from the conclusion if the entire population were audited. Of course, see, the sample is something which the auditor will always be considering. He will not be able to test 100%. So that's why this risk will always remain, which is okay. Now, for a population, what are the ways auditor can get into the sample? One is to look at the significant items, which is again based on materiality. That's what the materiality is that's where the materiality is required to be considered. Not only on the basis of quantitative aspects, but also qualitatively. Right. And then if you talk about the remaining population, so that should also not be ignored completely. Okay, so at least something you do. That's where we are talking about the sampling. Okay, now, if you look at this example, ABC is a company listed on stock exchange. XYZ are the statutory auditors of the company. It's into the business of garment manufacturing. Significant amount of sales come from export of garments to its subsidiary company, Movinsync Technology Solutions in Dubai. Company has significant trade receivables as on 31st March 23. So the reporting year is 22-23. Let's suppose. Okay. Invoice-wise listing of receivables outstanding is, let's suppose, given to you. As of now, we are not considering that. So the revenue is 8,000 million, profit is 500 million, materiality is 15 million. Then you have this performance materiality, 9 million. You are required to determine the number and the amount of items to be considered on quantitative basis. So what do? Some materiality threshold you apply and you consider that, right? Qualitatively, you will have to consider basis the sample that you select. What will you do? Items you will consider, right? So now in this case, what is going to be the approach which you will follow for consideration of all of these samples that we talked about, whether on the basis of quantity or qualitatively? That's where some of the methodologies are required to be looked at. Okay, statistical or non-statistical, wherein you apply the random sampling or you follow some approach in terms of considering the sample size, for which some of the factors that you consider: inherent risk, control reliance, materiality, as we just discussed, of course, the population size. And if, let's suppose, some analytical procedures have been performed and there are some focus areas, okay, frequency and magnitude of expected errors. This is generally done on the basis of past history, okay, and some of the other factors. For example, audit is going on, so what all things you have been considering in relation to that. So let's look into these factors and try to assess how this will have an impact on the sample size. I think you should try to answer all of these. Okay. Now, in this case, if, let's suppose, inherent risk is high, so how will this impact the sample size? Tell me, how do you think this will impact the sample size?
It will increase.
Increase, high.
Increase, right? Okay. Just give me a minute. So if, let's suppose, there is high reliance on controls, then what do you have?
Decrease. Sample size
Decrease.
will
Sample will decrease. Very good. So if, let's suppose, there is a decrease in materiality, sample will increase. If the population has increased, what do?
Then we increase that sample also.
Obviously, if the population will go in high, so you'll have to do something more. If, let's suppose, you have been able to obtain more evidence through analytical procedures,
increase.
why increase? Why increase? See,
We
why
have
do
to
you check the samples? Let's try to understand.
we have to decrease, sir, because we have more evidence on the analytical process, which means that sufficient and appropriate evidence is correctly obtained. In that case, we can decrease that sample size.
Right. So why do you check the samples? What is the purpose of this sample testing? You want to obtain the evidence. If, let's suppose, you are already able to obtain the evidence through another set of procedures. So does it mean you will skip this procedure altogether? No. But you can always cut down on the extent of this type of testing. Yes or no? So that's why what should you do? You should lower down the extent, right? Error expectation is high. I think we have already talked about it. In this case, it has to increase, correct? Now, there are various factors you will consider in relation to the sampling as well. So now what we can do is, I think now we can pick up questions. And with the help of those questions, we'll just try to get into the further details of some of these things that we have discussed, right? So just give me a minute. I'll open the set of questions. Okay, so now first one. We have this company BBNS Limited. Okay, auditor of BBNS Limited accepted the gratuity liability valuation based on the certificate issued by qualified actuary. However, auditor noticed that the retirement age adopted is 65 years. So while calculating that, while valuing that, what has been done? The retirement age has been considered as 65 years as against the retirement, you can say the policy which requires the retirement at 60. Okay. The company is considering a proposal to increase the retirement age to 65 years. So as of now, the retirement age is what? 60. As of now, it's 60. There's a proposal to increase this to 60. It's not yet finalized. So in this case, as an auditor, what do you do? How do you go about it? Your thoughts.
Sir, my thought is as per SA 500,
Right.
audit evidence. We need to get the appropriate and sufficient audit evidence to get the reliables and
Okay.
reliance on that. See,
Okay.
in this case, whenever there is a expert is used, the management is used the expert. There is two expert are there, the management expert and the audit expert. In this case, the management expert is used by the management to evaluate the gratuity liability.
Okay.
The auditor responsibility to see to check that the competence and capabilities and the objectivities of that particular expert, and also we need to understand the work of that expert. What are the assumptions? What are the calculation? What are the input is used to work out that valuation? And in addition to that, the estimation and everything the auditor is to get that evidence. But in this case specifically, the 65 years is used the age,
Right.
but the company is only in the proposal stage, not approved. Whatever the assumption is used by the actuary is not correct, then auditor definitely qualify this matter in the audit report.
Okay. Anyone else who would like to add to this? Anyone else? Okay, so let's look at this. See, in this case, company has used an expert. Okay, so somewhere we are talking about the work of management expert, which has been used. But whenever that expert is used by the company, can the auditor rely on their work as it is? Answer is no. Okay, auditor needs to obtain the evidence. In respect of what? Evaluate the competence, capabilities, and objectivity of that expert to begin with. Try to understand what is it he has done, means what work he has done. Evaluate the appropriateness of the work of expert. Again, very important. Yeah. Auditor may obtain information regarding the competence, capabilities, objectivity. So this aspect. From variety of sources, personal experience, CV can be obtained. These days you can go check the LinkedIn profile or the profile. Right? Discussions can be done how the management has evaluated that competence. Okay. Knowledge of the expert's qualifications, any publications, books of that expert. All of these things will help the auditor. Yes or no? Now, why is that important? Because if, let's suppose, the person who has done this job is not competent, then what do we say? Then it's more likely to contain errors. Yes or no? Now, aspects of the management expert's field relevant to auditors' understanding may include what all assumptions, methods are used by that expert, whether those are generally accepted within the expert's field, and those are appropriate for financial reporting purposes. Okay. Auditor may also consider the following while evaluating the appropriateness of management's expert work. What is that? Relevance and reasonableness of experts' findings or conclusions. Their consistency with other audit evidence. Whether they have been appropriately reflected in financial statements. If that expert's work involves use of significant assumptions and methods, relevance and reasonableness of those assumptions and methods. If that expert's work involves significant usage of source data, therein the relevance, completeness, and accuracy of that data. Because anything which is in the form of an input, which goes into that valuation. Okay, so it's important to understand what goes into the valuation. Because if the input is incorrect, then definitely the outcome is going to be error. Yes or no? Now, in the given case, what do we have? We have a qualified actuary who happens to be the management expert. But the basis of the age which has been considered is not correct. Why? Because the company is considering a proposal to increase. As of now, that's not increased. It's a proposal, may or may not go through. Okay, so this assumption methodology is not appropriate. Hence, the auditor will have to look into it to get this sorted in terms of this error. Means to get that corrected. If that is not done, then this may have some reporting implications.
Sir, if the
in
question
terms
does
of the modification. Yes, sorry.
So I had one question, sir. If
Yes.
the question does not specifically
Sorry, I've lost you. I can't hear you. I understand, Prashant, it was you. Can you please repeat the question?
Yes, sir. Sir, if it is not
Again, when you
specifically given
speak,
whether
your
it's
voice breaks,
management
huh?
expert or
When you speak, your voice breaks. So can you please repeat, Prashant?
yes, sir. No issue, sir. So
Yeah.
if it is not specifically given whether it is a management expert or an auditor expert, will we presume it to be a management expert always?
See, generally, you will be able to understand that. I won't say that you need to presume, first of all. Why? Because when it comes to the financial statements, okay, if let's suppose the language of the question is what, that we are talking about the financial statements, we are talking about the accounting, we are talking about the preparation or presentation of the financial statements. So who will be doing that? It will always be the company who is supposed to do that. Now, if you look at this question, nowhere in the question we have this given that there is an expert of the company. Let's suppose company has considered a valuation, okay, and the auditor is also looking into that valuation, right? That's where, till the time it's not specified that the auditor has brought in his own expert, you will always be understanding the point that, of course, if this is done by the company, it has to be the one which is engaged by the company, means the management expert. Even if the auditor has robbed in an expert, okay, there are high chances that the company would have engaged an expert, because if something is too technical for the auditor to bring in an expert, company would also be having an expert around that, right? So I would say this is how you will be able to generally understand. But if let's suppose in the exam you have a confusion, then you can always write this, that this is what you understand, basis which this is what you have presumed, which is, to my understanding, should not be a problem, because you are anyways explaining the solution and you are also explaining the understanding of the question. So if your understanding is correct, then there is absolutely no harm in doing that. Okay, if there is any confusion around it. Sure. So let's look at the next one. CA Prabjot, or let me just bring it to the next page. Just give me a minute. CA Prabjot has planned to observe physical count of inventories at the plant of a company located in the remote area in the state of Uttarakhand. Okay, as a part of its statutory audit exercise, few days before the completion of financial year 23-24. He already informed his intention to the management that he is planning to visit the plant site on 29th of March 2024. He plans to inspect the inventories, observe the counting process, and perform the test counts, among other matters. The management has made all the necessary arrangements to facilitate the above exercise. However, an agitation in the Himalayan hills started on 28th of March 2024 for the announcement of a strict law regarding the conversion of agricultural land for commercial use. Many civil society groups are participating in the agitation. NH7 leading to the plant site is blocked by the protesters. Plant is not accessible through any other mode. The blockade is lifted 1 month after the state government announced the formation of a committee to look into the protesters' demands. Now, in the given case, you are required to comment basis this SA 501. Does the above case highlight a situation of impracticability of attendance at the inventory count? Over to you. What do you think?
No, sir. Answer is no.
Okay, why no?
Because impractical means he cannot able to attend that physical count uh, for such a long time. But here, the particular pretext is happening only for 1 month. After 1 month, the black card is lifted. After that,
Right.
he can go and verify that physical count, and he can check that roll backward process to
Hmm.
confirm the um, reporting period inventory. But
Okay.
this is not a situation of impractical of attendance.
Right. Good. So let's look at this. See, the given situation does not highlight the impracticability of attendance. It only shows auditor is unable to attend physical inventory counting due to unforeseen circumstances arising out of this agitation by protesters. It has led to inaccessibility of the plant site for a month. Yes or no? The blockade is also lifted after a month. So if the auditor is unable to do the physical verification, maybe at that point of time, auditor shall make or observe some physical counts, maybe at a later date. Okay. And then do the rollback procedures, right? So in this case, to say that it's an excuse and that's why you'll not be doing the physical verification may be inappropriate, right? Next. On reviewing the legal expenses account of Z Limited, CA Sunita, who is the auditor of the company, finds that legal fees amounting to rupees 10 lakhs was paid to B. Okay, B George, who is a reputed lawyer, and this is in respect of financial year 23-24. On inquiry with the management regarding the purpose of such expenditure, evasive reply was received from the management stating that a lot of work is performed by the said lawyer on behalf of the company. However, no specific details as to why those payments are being made was given by the company. She finds it proper to correspond directly with the lawyer. She obtains the address and email ID of the lawyer from his professional services bill and shoots off an inquiry letter asking for the nature and status of litigation claims against the company on the letterhead of the auditor, means on her letterhead. Okay. Now, you are required to comment upon this. One, as regards the approach of the auditor. Irrespective of the merits of the approach which is followed by the auditor, what is she trying to achieve? So you are also required to comment. If let's suppose you forget about the approach, what seems to be the objective by having this communication with the lawyer? Okay, yeah. So over to you. Any thoughts?
So the approach is not proper for once because she has corresponded directly with the lawyer,
Okay,
and lawyer is first of all not obliged to breach the confidentiality of the client,
okay,
because there is section 126 of the Evidence Act,
right,
which is, and there is a privileged communication between the lawyer and the client. So
right,
those details the lawyer cannot share with the auditor.
right,
So that approach is not proper.
Right.
What she could have done, what the auditor could have done was she could have requested the management to on their letterhead to prepare a letter and then send that letter directly by
Hmm.
the auditor to the lawyer
Okay.
for those confirmations.
Okay.
So what is she trying to achieve is she's trying to achieve the uh, confirmation of the litigation claims.
Right.
So that SA 505, that is,
Okay.
and 501.
Okay.
So these are the two.
Okay.
Yes,
Anything
sir.
you'd like to add? Yes, Aminathan?
Yes, sir. Here, on the first part, he explained this clearly, but that approach is not right. He has to approach the management. Management will prepare the letter of inquiry. Then it will be sent by on the management letterhead. Then she will be sent and get the information. On the
Right.
second part, why the purpose is that to identify any litigation or claim is involving, is there
Hmm.
any identify and give rise to any material misstatement is there or not?
Right.
That is whether it is if there is any material effect, whether that is properly disclosed and accounted in the financial statement. That is a reason, main reason she is looking into this matter.
Okay.
So I have one problem, sir. At that time also I wanted to ask you, sir, in these questions, the difference between 250 and SA 501.
Hmm.
So that aspect can be brought out.
See, definitely you can always bring that out. There's absolutely no problem in doing that. Okay. See, when it comes to the questions, now please understand this challenge should not be there. Let's try to understand. Currently, we are discussing about chapter number 5. And let's suppose when you are preparing for the exam, you will know that you are looking at the questions of chapter number 5. Okay. So that's why all of these questions that come across. So you'll say that chapter number 5, let's suppose, deals with 3-4 auditing standard. So that's why these are moving around these for 3-4 auditing standards only. Or maybe let's suppose that chapter contains only one auditing standard. So you'll know that everything has to come from that particular auditing standard. So whenever you are looking at the questions in the chapter, now please understand your thought is narrow. Why? Because you are always thinking about that auditing standard because that auditing standard has to apply. Yes or no? Yeah, that will always happen. But when it comes to the exam, you don't know whether this question is coming from a particular chapter, and that's why you need to apply only that auditing standard or other auditing standard. And that's why it's always better for you to go back, look into the past year question papers, RTPs, some of these things wherein you have a hodgepodge. Yeah, it's all mixed up. And that is where you look into the questions in an independent manner. Independent manner means independent of which chapter it belongs to. And that's where you try to understand the question, the requirement, and the applicable auditing standard. Whichever auditing standard you believe is applicable. Okay, but please understand you need to have a clarity around it. Because what is the requirement of the question and what is the solution in such a case? Accordingly, if you believe there is something you want to add to that, over which you have a complete clarity, you can always do that. Understood? Clear, Prashant?
Yes, sir. Perfect, sir. Thank you.
Sure. Okay, now coming back to this. So I think we have already discussed this one. We understand that the approach is clearly wrong. Why? Because there is a way this communication has to happen. In the given case, now what is the objective of the auditor? Auditor has a concern that some amounts are paid to the lawyer. So what's the purpose? Now the company may say that if the amount is paid, there is an invoice for that. You go and audit the invoice and the expense is recorded in an appropriate manner. So that part is completely okay. So the concern of the auditor is not around the legal and professional expense or this legal expense of 10 lakh. No. So the concern is the linked item, or you can say the underlying item in relation to this expenditure. If the company would have explained that underlying item, then the problem would have been, you can say, again, cut down to a certain level. But as of now, the clarity around that is not available. The company is not giving proper details. Even if the company would have provided the complete understanding, even in that case, that would have been the internal evidence which the auditor would have received. Yes or no? That would have been the internal evidence. But the auditor will always find external evidence to be more reliable. That's the methodology. That's the principle. So in this case, what is she trying to achieve? She is trying to achieve external evidence. Why? Because that is more reliable. That's the objective. Clearly. How will she achieve that? Now that is where there are few protocols. Now she will have to appreciate that lawyer happens to be a party of the company. Yes or no? So if she were to reach out to the lawyer, forget about lawyer, that lawyer is privileged, so that's why he'll not be having an obligation. Let's suppose it's not a lawyer, it's a vendor, it's a customer. So are they obliged to respond? No. They are also not obliged to opt. So that's why, what do? You try to bring in that obligation. How do you do that? You reach out to the company. And anyways, it's very important for the auditor to reach out to the company and make them understand we are doing this communication. Yeah. Yeah. So you'll always inform. So the company is not stopping the auditor from doing that. Yes or no? Yeah. Because it's not an investigation going on. See, it's not an investigation. It's the audit. There's a difference between that. So there's nothing which the auditor needs to keep confidential and hide from the company before doing that. No, that's not the requirement in the given case. Okay. So that's why in the given case, what has been the biggest problem? The communication between the auditor and the company in respect of this performance of procedure of rolling out of confirmation is missing. Okay, which is the first step for the auditor to proceed with any such procedure. Right? Right? And that's where the lacuna lies. Clear? Yeah. So the approach of the auditor in the given case is not correct. She needs to make management aware of her intention to communicate directly with the lawyer. And in that case, the management will provide the letterhead or these letters that will be sent out on the letterhead. Of course, sent out by auditor independently, but that has to be on the letterhead of the company. Right? Let's look at the next one. During the audit of TS Limited, now we have this company TS Limited, CA Tanmay, so he happens to be the auditor, I think, finds that substantial inventories of the company consisting of mast lighting poles remain with super industries for certain finishing works. So I think this is again around inventory only. Huh? Okay. While planning the audit procedures, he had planned about seeking confirmation from super industries regarding existence and condition of such mast lighting poles belonging to TS Limited, lying with them as on 31st March 24. Okay. However, premises of super industries were raided by DGGI officials in connection with busting of a fake billing scam. Proprietor of the firm was arrested in November 23 and came out on bail in the month of March 24. Details of the proprietor and his firm were flashed prominently in local newspapers of the city where the company is located. CA Tanmay also belongs to the same place. Now, in this case, what is going to be the course of action on the part of the auditor? What do you think?
So, when the inventory is locating at the third party, definitely auditor should get that appropriate audit evidence on the
Right,
inventory, the confirmation from the third party stating that the existence and condition of the inventory
right,
on the particular date.
right,
But in this case, particularly, there is a fact the billing scheme is came into
right.
light of that. Then the doubt of integrity is going on. The thing,
Okay,
the integrity is issue is the reason issue.
right,
In the situation, the auditor can think about the alternative procedure to check that he can visit inspecting and check that physical counting, and also he can arrange alternate procedure to other auditor also can go and visit and do the procedure like that.
okay,
And we can try to get the corroborative audit evidence, like the shipment, whenever there is a stock is there, maybe
right,
for the job work or some other purpose, when the
okay,
invoice the e bill and some other the note, delivery note, whatever they issued, whether it is there or not. And also we can check that uh, super industries auditors in the report, is there any issues is find out or not, like that he
right.
can check, verify, and accordingly he can issue the report.
Okay, good. So moving on to this. So if you look at SA 501, it talks about the inventory which is lying with third parties. In which case, what will the auditor do? Auditor to obtain the audit evidence regarding the existence and condition, both. Okay, so what are the procedures auditor will perform? Request the confirmation from the third party in relation to the quantity, condition. Perform the inspection or other audit procedures. It further states that where the information is obtained that raises a doubt about the integrity and objectivity of the third party, auditor may consider it appropriate to perform other audit procedures instead of or in addition to confirmation with third party. Now, what are those other audit procedures? Attending or arranging for another auditor to attend. So means instead of obtaining the confirmation, auditor can go and visit that. Means do the physical verification. At times the auditor may not be present at that location. In terms of its proximity, it may be at distant place. So auditor may engage somebody else who will go on behalf of the auditor to go physical verification. Okay. obtaining another auditor's report or service auditor's report on the adequacy of third party's internal control for ensuring inventory is properly counted and adequately safeguarded. So this is another thing. Inspecting the documentation regarding inventory held by third parties. In the given case, if you look at the third party, their inventory is their integrity is definitely challenged in view of the regulatory matter which has taken place. Right? So in this case, what is it that the auditor is expected? Definitely he should obtain the confirmation. Okay. He may attend a third party's physical count or ask some other auditor to perform physical count on his behalf. He can also inspect a record of goods sent and received back from such party, okay, by looking at the underlying documents. Clear? Next.
So just one line, sir.
Yes. Yes.
So in the answers, it is said that besides obtaining confirmation. So, sir, still we will rely on the confirmation from such a party?
No. That's why it says besides.
No, in the sense that we will still obtain as a first step the confirmation.
See, please understand that confirmation is an external evidence. In the given case, there are two things which are required to be handled. Okay, let's put it in this manner. What are the two objectives which the auditor is trying to achieve? Auditor wants to move from internal evidence to external evidence. See, that is the first objective. Why? Because external is more reliable. To move doesn't mean always it is required, wherever possible and as much as possible. So that's why, what is he doing? He's trying to obtain the confirmation. Now we don't know whether the confirmation will be received or not. That's a challenge in itself. But should that be asked for? Why not? Of course, that should be asked. Okay, so this is the first endeavor, you can say. Now, in the given case, we have a challenge. What is the challenge? The external evidence that you ask for, okay, means the confirmation that you ask for. You don't know whether that is reliable or not reliable. So you are trying to get that thinking it is more reliable, but now there seems to be a question mark on its reliability. So that's why auditor is thinking that I'll go and verify that myself. Okay. So on the top of it, he is now trying to do what? He is trying to get the comfort. Why? Because this integrity is an issue. Yes or no? Because of this integrity issue, he is trying to do, or he will have to do something more other than just obtaining the confirmation. So that's why you can say it's a two-step process. Now you have a thought process. So you are saying at the first place, when you are saying you have a concern around that party, so why do you ask for the confirmation? Why don't you skip that? Go physically verify that. Of course you will do that. Of course you will do that. Just a minute. Huh? Of course you can always do that. But let's put it in this manner. Okay. Whenever an auditor performs the audit procedures, does he ask for management representation letter or not? Answer is yes. So somebody may say that when all the audit procedures are performed, why do you go for representation letter? Yeah. So same goes over here also. When you are going to a location, when you are going to a place, so something you will ask for from that other party also, that what is your confirmation, what is your statement. So this confirmation is what statement of that other party, which the other party will provide. So even if auditor were to go there and physically verify, he'll need a statement from the other party, not only from the company. Only then he will be able to plan the physical verification. So that's what he's doing here. Yes, Prashant, please go ahead. I think you have some more queries on this. Yes.
No, sir. Perfectly explained. Sir. Thank you.
Now clear?
Yes, sir. Perfect.
Okay, very good. So let's look at the next one. As auditor of Groom Limited, you have sent positive confirmation request to 30 creditors of the company. So I think we discussed about this positive, negative as well. All the creditors in the informal sector are small concerns, means those are small setups. You selected to send positive confirmation to all the above parties at their business addresses stated on respective bills after discussing the matter with the CFO of the company. CFO is cooperative and doesn't raise any hassles in the matter. Responses to confirmation requests are received within a week's time. Now that is where the concern arises. What is that? You have all the creditors in the informal sector, means those are unstructured, number one. Those are small concerns wherein you generally find confirmations to be delayed, or so practically this is what you will see. But over here, what do you have? Within a week, you receive all the confirmations, and these are not a small number. You have 30 confirmations, you receive all. Your article assistant, means the engagement team member, informs that out of 30, GST registrations of 25 parties have been cancelled during the financial year 23-24 itself by collating the information from GST portal. Now there comes another concern. He further informs you there are no fresh registrations pertaining to PANs of those parties. Now, how do you deal with this situation? Means what do you do as an auditor in the given situation? Over to you. Your thoughts.
So my thoughts, it's look like a fraud risk factor it's indicating.
Okay.
The thing is that as soon as the auditor is sent the positive confirmation, they
Right.
received within a week times.
Okay.
But however, the fact that about 25 creditors that the GST registration cancelled,
Right.
I feel it is a fake registration, fake company is provided, and
Yes.
the creditor balances they wanted to modify and boost the balances of creditors or something like that. It's intentionally they done it, I believe, by the management. And the PAN number also is not the first registration is obtained.
Okay.
So definitely this is a doubt of the management itself. They might responded back to the auditor, not by that creditors, by
Right.
directly.
Right.
That's what I feel that
Sure. Sure. Good.
definitely it is a fraud risk factor.
Right. Sure. So now let's look at this. See, if the auditor determines that a response to a confirmation request is not reliable, what will he do? Of course, as we just discussed in the previous question also, the objective is defeated. Why are we trying to get into it? Because we believe external evidence is more reliable. Okay, as we discussed in the previous question also, in the given case, we find that GST registrations of 25 parties have been cancelled during the year. Means their businesses were closed. Okay, they have not taken fresh registrations. However, what do you get? You seem to be getting a confirmation from that. So when their businesses are shut, who is responding there? Yes or no? When the audit evidence is obtained from sources external to the entity, circumstances may exist that affect its reliability. All responses carry some risk of interception, alteration, or fraud, which seems to be the case over here. Factors that may indicate doubts about the reliability of the response include: was received by the auditor indirectly or appeared not to come from the originally intended confirming party. Okay, so there's a risk in the given case. What is that? That even though responses are received, they are not originating from the intended confirming party. Maybe somebody else is sending that on their behalf. So for which auditor needs to move into the further details. He can't just simply rely upon that as it is. He need to corroborate that further. Right? Next, CAM Hussain is appointed as auditor of a firm for the year 23-24 on 31st July 23. Accounts of the firm were unaudited for the financial year 22-23. Firm had material inventories reflected in its financial statements even as on close of 31st March 23. He is performing audit procedures, including attending physical inventory count as at 31st March 24. However, there's a lingering doubt in his mind regarding the opening inventories reflected in the financial statements. Does there exist any responsibility on his part in such a situation? What do you think?
Yes, sir. That per SA 510, that initial audit engagement opening balance, definitely the auditor has to get the appropriate and audit evidence
Right,
to check the balances on the prayer closing balance is correct or not. He has to ensure.
right,
The reason
right.
is that is there any material misstatement which
Yes,
will be continuing. So
right.
since this particular item is not audited in the previous year also, so
Yes,
he has to do the physical verification as per now, and he has to roll back the process to check
right,
any the balances, and also the valuation also he has to do it.
right. And what are those? So we have just those procedures on the screen right now, observing a current physical inventory count and reconciling the same to opening inventory quantities. So you can say rollback. Performing audit procedures on valuation of opening inventory items. Performing audit procedures on gross profit and cutoff. Okay. Next.
Sir, here what is that cross profit cutoff means? What the intention of this answer?
See, they are just trying to look into the margins. Okay. Because as regards inventory, what do? A lot of procedures you perform. So inventory is a cycle. And this cycle includes purchases. This cycle includes consumption of the inventory as well. Okay. So when you are looking at the margins during the year, so that will also give you an insight that do we have some errors in terms of the valuation or the consumption which has been booked during the year. So that's first thing. Cutoff is again around the similar procedures for the procurement which would have taken place. Because in this case, you are trying to check the inventory balance. So that's why all of these. So even though we have put down these procedures, there are other procedures also because you are trying to obtain the comfort around the inventory balance in terms of its opening balance. Okay. So we can look at this next one now. CA Ritesh has drawn some samples during the audit of a manufacturing company for testing controls as well as test of details. Okay, so some samples have been drawn. On the basis of the samples selected, he reaches an erroneous conclusion that access controls on applications are less effective. Okay, so now we are talking about a conclusion of the auditor basis the sample selected. And what is the conclusion? Access controls on applications are less effective. Okay. Further, on the basis of samples selected, he concludes erroneously that work in progress inventories amounting to 5 crore in the financial statements are materially misstated. Right? Next, outlining the above risk involved, discuss how this is going to affect the audit of the company. Over to you. What do you think?
Sir, test of details
Yes.
versus test of control is different actually.
Right.
When there is a defective in the desktop control, access control, but definitely there is a question of a detailed problem in the process actually. Definitely he has to reassess and work on the control environment. He has to strengthen and the policy and procedure and everything to be strengthened on this case. It's a totally questionable when there is a test of control is missing.
Right. So let's look at this. Okay. See, the described risk is what? Sampling risk, which will always remain. Yeah. So there's always a risk that the sample you select, okay, maybe giving you the conclusion, but the samples you do not select may contain some errors. So it's a risk that the auditor's conclusion based on a sample may be different from the conclusion if the remaining samples which are not tested were also tested. And it's going to be there. So you can say it's a sort of inherent risk. Can we do something about it? Answer is no, because that's how the audit procedures are required to be performed, because eventually you will not get onto testing 100%. Yes or no? In the given case, auditor has arrived at erroneous conclusions on the basis of samples selected. One, pertaining to test of controls, wherein access controls are less effective. Second, in relation to test of details, what is the conclusion? That the WIP inventory is materially misstated. Okay. Now, this type of erroneous conclusion affects the audit efficiency. Why? Because this would usually lead to additional work to establish that the audit conclusions were inaccurate. Definitely, the auditor would have to perform more, get into the further audit procedures, extent of testing may have to be increased. Yes or no? Yeah, so that is bound to be there. Correct?
Yes, sir.
Sure. So now, any questions, any doubts that you may have, let's discuss that and then we'll just close our discussion. No questions?
Yes, sir. Each and every question is interlinking with the other essays as well.
Correct.
Yeah, unless otherwise we understand the other essays, we cannot able to answer this.
Yeah, so definitely, see, audit is such a subject. And I think we have discussed this earlier also that you should be considering it's a practical subject. So it's quite interlinked because you can't say that when you go audit, you'll only be looking at one of the things. Because if you ignore the other things, you never know the impact of those other things on the thing that you're checking. So you're right, and that's why once you're through with audit in terms of your preparation, it's always advisable to do a revision and revision with picking up all of these questions, maybe through mock RTPs, wherein you can get the complete insight about all of these interlinkages which are possible, right?
Yes, sir. Thank you, sir.
Sure. All right. So we can close this discussion. Thanks everyone once again for your time today.
Thank you very much,
Ashok,
sir.
we can close this. Yeah, thanks Prashant. Thanks Aminathan. Thanks everyone. Yes.